question. Could the rise of artificial intelligence lead to job losses for everyday Americans trying to make ends meet? Our next guest, who is the CEO of one of the most powerful AI companies in the world, says we are heading for a catastrophic employment crisis that no one is talking about. Well, we are going to talk about it with Dario Amodei, who is the CEO of Anthropic. He joins me now. Dario, thank you so much for joining us. You have a critical message for us this morning. So how many job losses are we talking about here, and who is at risk?
So just to back up a bit, I've been working on AI for 10 years, and probably the thing I've noticed most about it is how fast it's making progress. 2 years ago, it was at the level of a smart high school student. Now it's probably at the level of a smart college student and reaching beyond that. And on one hand, I think there's a number of very positive things that are going to happen. I used to be a biologist. I think AI has exactly the kind of skills that are needed to cure important diseases like cancer and Alzheimer's, to provide cheaper energy, many positive things. But exactly those same kind of skills, things like summarizing a document, brainstorming, putting together a financial report, makes me worry a lot that entry-level jobs in areas like finance, consulting, tech, many other areas like that, entry-level white-collar work, I worry that those things are going to be first augmented, but before long replaced by AI systems, and that we may indeed. It's hard to predict the future, but we may indeed have a serious employment crisis on our hands. Yes, so it's very hard to predict these things, given how fast, AI is making progress. But I would not be surprised if somewhere between 1 and 5 years, we started to see big effects here. I've heard a number of people talk about this in private. AI CEOs talk about this in private. CEOs of other companies talk about this in private. And I really felt that, the message that this is happening hasn't been getting out to our legislators, our Congress people either. And so I felt I needed to speak up on the record. I do think that this is something we can prevent this, but we need to act now. I don't think we can stop the AI bus. There are 6 or 7 companies just in the U.S. working in this area. I just run one of them. Even if our company stopped doing what it was doing today, all the other companies would continue. Even if all 6 companies started, then China would beat us. Can't stop the bus, but I do think we may have an opportunity to steer it. Yeah. And I think we need to get Congress people, legislators, the public to think about this now. One of the first steps we're taking is just measuring the effects. Anthropic has put out something that we call our economic index. And using the economic index, we try and track the rate at which these things are happening. At some point we have to go beyond measuring this to actually taking action, to trying to build our AI systems in a way that augments rather than places. But that won't be a long-term solution either. We need to think about what the government is going to do. And there's a wide range of actions that the government could take. And it's not my place to decide which of those are correct. But I think the first step is people need to think about this and start taking it very seriously.
Yeah, but you can use that data set and the NFCS data sets to do causal statistical analyses. The question was asked, I believe, by Vice Chair Calabria. Does financial education work? Is it making a difference? Is it changing behavior? Well, we do see that people who have higher levels of financial literacy, over time, it actually predicts financial outcomes. Looking at that longitudinal data and looking at the NFCS data, we're able to see that, there have been research done by external researchers and the foundation that look at the impact of financial education mandates that states have been implementing. Just over half of the states have mandatory courses that students are required to take to graduate from high school. And using a differences in differences analysis, we're able to establish that those students who were exposed to mandatory financial education, in fact, have better downstream credit behaviors. They're less likely to be overcharging. They have better debt behaviors. And there are many more ways. There are all kinds of econometric techniques and statistical analytical techniques that you can use to slice and dice the data.
Good. Thank you all for being here today. It's an honor to be with you. Promoting financial literacy is among my top priorities as the 79th Secretary of the United States Treasury Department. Why am I so passionate about this subject? When I was a young boy, my family fell on hard times. Growing up in South Carolina, my father made some risky investments that put us on our back feet financially. His career was a riches to rags kind of story. And when it was rags, the whole family suffered. So I did my part to help support us. Believe it or not, I began my first working age job and received my first W-2 at age 9. I actually filed my first pay stub for this job just the other day. I was in New York last Friday speaking to a group of community bankers, and we were talking about the importance of financial literacy and the good work that they do within their communities. And one of the bankers, a very enthusiastic gentleman from Long Island, suggested that we should change the name from financial literacy to financial mastery. I like the term the professor just used, financial security.
Welcome to the Crypto Teacher, and you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have the CEO of Anthropic, which no one knows but us. And then also we know he's always at the World Economic Forum, sending out the alarm that AI is getting smarter and smarter. But remember, guys, they haven't even turned on the supercomputers. And he says 10 to 20% will be out of work within 1 to 5 years. But you know what I tell you, it's going to be 40 to 60%. Remember, majority of the jobs here in the United States are service jobs. They're repetitive, so it's easy for AI to replace them. And then you're talking about these humanoid robots that have synthetic brains where they can download something and learn it in 2 minutes. There's no job they can't do. It's absolutely not one. And that's the reason why it's so important for you to get back to the creator and start creating. And remember, the Crypto Teacher told you. And guys, we have the government is consistently doing financial literacy. I've never seen it. Never seen it ever in my life. But we know the reason why. The United States dollar is going to lose that world reserve currency. And we're going to a level playing field. Instead of that dollar being worth $1, you're talking about 50 to 75 cents. And remember, the Crypto Teacher told you. And with all these people going to be out of work, that's the reason why universal basic income is so important. And remember, the Crypto Teacher told you. Now we have Bo Hines on the digital asset space is going to update the payment rails. And then also, we're going to have tokenized securities, and stable coins are the foundation of this new economy. If you're buying stocks, earning yield, you need stable coins. Remember, DeFi is definitely the new banking. And we have Vlad from Robinhood on tokenization and says we don't need Congress for that. And he's exactly right. All we need is the SEC approval, and not just stocks are going to be tokenized, also the private sector. And also, guys, we know all goods are going to be tokenized. And remember, the Crypto Teacher told you. And we have David Marcus on big banks coming into the digital asset space. But never forget, the big banks and big corporations funded Bitcoin and crypto from the beginning. And remember, the Crypto Teacher told you. And David Marcus speaks about strategies. Michael Saylor laying out the blueprint. And there's going to be more corporations to follow. And we have international spending in the U.S. is declining. And it's going to continue to decline because we also know that dollar is going to continue to decline. And the people overseas is going to cheer the fall of America to Babylon. And remember, the Crypto Teacher told you. And we have Peter Navarro says that nothing has changed when it comes to tariffs. And we know that movie is going to continue. But tariffs are here to change the supply chain. And then we had Trump meet with Jerome Powell. And we know that Trump works for the banks, and that's the reason why he's pushing this new banking system. And remember, the crypto teacher tells you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
We're working to welcome in the golden age for digital assets, as the president likes to say. I think that just being on the ground at this conference, meeting with folks that are building in the United States is extremely important. We want to welcome folks that have gone offshore back home. Our message to these people is welcome home to the United States, the best capital markets in the world. We want to make sure that innovation is happening on our shores. And then we move on to market structure. We wrap up that construction phase, move on to implementation. And this is where we talk about plugging in these new technologies, integrating them into the traditional financial system, so we can really update what's been an archaic financial system for quite some time. We're streamlining payment rails. We're ensuring U.S. dollar global dominance for decades to come. You're talking about trillions of dollars being poured into U.S. treasuries and people purchasing U.S. debt. This is all very exciting for the American people. They're going to have payment rails that are much more cost effective, much more expeditious, and much more transparent. I think that should be exciting for everyone, and we're certainly happy that this is being done in a bipartisan way.
A foreign issuer of a U.S. dollar-pegged stablecoin, they have more than 60% of the market, and they're the 19th largest holder of U.S. debt?
Well, and they were the 4th largest purchaser of U.S. treasuries in the last year, which is quite remarkable. But look, we're creating fair market competition here in the United States. I think there's going to be a lot of competitors in this space. We've already seen a lot of the traditional financial institutions come out and say that they're going to create their own stable coins. So I think it's a very exciting time for the space. And again, we're revolutionizing the financial system. If you look at how things have evolved in other areas, even the ways in which we communicate with technology, a lot's changed in the last 2 decades. The ways in which we move money really hasn't. And I think that's something that we're very focused on changing and really just revolutionizing this space as a whole. I think it'll be great for the U.S. capital markets, great for our economy, and certainly great for this industry. And that's why I continually use the term revolutionize, because as we update the payment rails and fix the plumbing in the current financial system, it gives way to the possibility of tokenized public securities in 24/7 markets and all of these things that many folks in this space dream of. I think that a lot of the traditional financial players dream of the same thing. I think it benefits everybody. If folks want to go in and out of our marketplace, they're going to have to use U.S. dollar-backed stables. That's great for the United States of America. It's great for innovators that are here, and we welcome that innovation. We hope to see it through for the American folks, and that includes an accumulation strategy. If you look at the fine print of the EO and the Strategic Bitcoin Reserve, it kicks that process over to Commerce and Treasury to come up with new and innovative ways. And, as the president likes to say, we have a lot of high IQ people in the cabinet, especially in the Digital Assets Working Group, which was established in the first executive order on digital assets in this term. We'll flesh these ideas out. We'll move on those so we can implement most expeditiously, and we'll go from there.
And we've actually been engaging with the SEC Crypto Task Force as well as the administration. And it's our belief, actually, that we don't even need congressional action to make tokenization real. The SEC can just do it. And they can do something akin to what they did a few decades ago with Reg ATS. They can issue exemptive relief from certain securities laws in lieu of formal rulemaking. And this is kind of what we're engaging with them about. I think that, and I think they're excited. They're excited, and everyone seems to want this to happen. So it's my hope that by the end of the year, we'll have some more clarity on how to actually tokenize securities. Private companies is kind of a different thing. And as you mentioned, private companies is very important because if you're a retail investor in the U.S., right now, you can't invest in SpaceX or OpenAI or countless other companies that have grown from basically nothing to hundreds of billions in valuation, all in private markets, while at the same time, you're free to invest in meme coins. And now, I'm a fan and supporter of meme coins, but I think these two things cannot coexist, where SpaceX and OpenAI are too risky, but you can do whatever you want in the meme coin world. So for that, we need a complete rethink of the accreditation rules. We basically need to make them much more self-certification based, where I, as a retail investor, can say, I understand the risks, I want to be able to invest in startups, and I think if we can figure that out, it'll unlock a huge amount of innovation and wealth creation for the U.S. and overseas as well.
CEO David Marcus. Marcus previously led payments at Meta, He's also at PayPal and has been going to this conference, I believe, since something like 2013.
Yeah, that's right.
Okay, so what, it was like 5 guys in a basement in 2013, and now it's this?
It was, maybe 100 people in San Jose who didn't know what they were doing, but they found Bitcoin interesting.
And how many people were talking about this time?
35,000, I think.
So,
yeah.
When you saw the vice president there, I mean, if I had asked you in 2013, the vice president shows up at something like this, did you ever think that was in the cards?
If you asked me a year ago whether that was going to happen, I would not believe you.
And so where does this go from here? We were just talking to a fellow from Merrill Lynch, talking about sort of, when and if these major firms are actually able to start pushing this stuff, not just sort of accepting it, if you will. How does that change it? Or do you think that's already built into the price?
No, I think there's so much room to go from here because Bitcoin is becoming mainstream. It's becoming really the true digital gold that we've all been talking about for a while, but now it's actually happening and people care.
But you've always talked about also trying to make it a payment system.
Yes.
Actually buy stuff with it.
Not necessarily with Bitcoin to unit of accounts, but build a real-time settlement network on top of Bitcoin.
Which is what your company does.
Yes.
So the question is, when does that take off?
Well, it's taking off right now. We're having very large digital banks coming onto the network. We have Nubank that has 100 million customers in Latin America. We have Revolut coming on. We'll make announcements soon about U.S. banks coming on as well, and other large wallets that are coming onto the network. So we're live in 70 countries, and you can move any currency to any currency in real time 24/7 on a weekend with Bitcoin in the middle. So it's happening. The really interesting thing with Bitcoin is the incentives that were baked in 16 plus years ago, and now you see it play in such an incredible way. We had a lot of concentration with strategy, and suddenly you have dozens of other companies that are spinning up. So you're spreading the risk basically into other companies, and even Michael would say that he welcomes other people doing it.
David, Oxford Economics says that negative perceptions around tariffs and trade wars and U.S. immigration policies are discouraging international visitors from the United States. Its researchers predict a 9% drop in overall foreign visits this year and an $8.5 billion decrease in related spending. Las Vegas, for example, has already seen this, a 3.4% drop in international arrivals at the airport in April, down from a year earlier, the 4th straight month of overall declines in visitation at the destination. And I heard it on the earnings calls from Wynn and MGM Resorts. I heard it on Marriott and Hilton, acknowledging they've seen a hit, especially in Canadian visitation, though they've characterized this as a very small piece of their overall domestic business. So who benefits? Booking Holdings is pointing out booming business overseas, and we heard that from the big hotel companies as well. The rest of the world, Canada, Asia, within Europe, Mexico, they're all getting visits from travelers who otherwise might be coming here.
The court told us, they didn't all but tell us, they told us, go do it another way. So you can assume that even if we lose, we will do it another way.
So looking for other options that they know are out there if they need to find them. Then finally, John, one other piece of news here from the White House today is Federal Reserve Chairman Jay Powell was here meeting with the president at the president's invitation. The Fed saying in a readout after that meeting that the two men discussed growth, employment, and inflation, but that Powell did not discuss any expectations for monetary policy, except essentially to say that the Fed will remain data dependent as always and focused on its dual mandate. We also heard from the White House after that that the president told the Fed chairman personally and directly in this private meeting that he believes it's a mistake not to cut rates. So both men sort of having a chance there to air privately a lot of what we've heard from both of them publicly.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID 33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.